Enda, what was the key takeaway for you then from this trade data?
Exports were up 18%, Tom, in dollar terms, and that's a big takeaway. A very strong set of results for China's export sector. It speaks to what you've just said. Production came back online in the month. Logistics improved, as in factories were able to get their goods from the factories to the ports much easier. And of course, the ports themselves got up and running. So it all lent itself to China's manufacturing sector finding its feet. But even the ultimate end demand was stronger than anticipated. Now, the import side of it, though, was quite weak. That came in at around 1%, and that speaks to the idea that there's still plenty of softness in China's economy, that things aren't yet back to normal. And I think even looking at the strong trade data today, the strong export figures today, people are saying, well, wait a minute, there's an inflationary impact in some of that. So you've got your prices versus volume, and people aren't confident that this trade story will remain as robust as it is in the months ahead. But nonetheless, the numbers are what they are. It was a better than expected read for exports out of China.
Better than expected read, and of course we also had the credit data coming out of China coming in above 1 million expected, but also on the flip side, of course, continued concerns about the property market there. So Enda, as you look across the broader economy, what is your assessment of the health of China's economy, and as you take into account the latest trade data then?
Well, we do have a PBC briefing going on at the moment, actually, Tom, and some of the remarks coming out of that early on were the fact that there's plenty of liquidity in the financial system, for example, and it speaks to the idea that China's problem isn't the amount of liquidity going around or isn't the level of interest rates. It's more about the ongoing disruption linked to the aggressive COVID strategy of either lockdown or ongoing testing. That's impacting consumer sentiment. It's putting a brake on the recovery. And of course, like you said, the real estate story hasn't gone away. The big slump in activity there continues to be a drag on things. That pillar of trade, as we say, even though those figures that came out today look good for June, people are saying global demand is coming off the boil anyway, so later in the year the export story for China won't look as good. So when you add it all up, that slow real estate sector, the ongoing COVID disruption, the expectation that trade will come off the boil over coming months, there's still plenty of work to be done to keep China's economy ticking over, and certainly a lot of work to be done to get it within even the ballpark of the government's growth target of 5.5% for this year.